please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're watching Halftime Report. Well, Udin Mukherjee has been in London actually all of last week, and he caught up with Lucy McDonald of Alliance Global Investors as part of our special series London Eye, and began by asking her how she sees India and whether she's been able to spot high-quality companies with great potential in a market like this.
Particularly in the technology sector, where there is a very strong domestic and international growth potential, and companies which can compete on a global stage. And that, for us as global investors, is what we're interested in, is seeing where the companies are which have really been supported and have been able to compete. And that is an area where we're still interested. I think what's changing there is for the Indian companies is that the end clients for all of them are demanding higher value-added service, and they are changing the scale of the projects that they are asking for. And that so means that all companies need to be able to provide a lot broader services than they did in the past. So it's not just a question of outsourcing or even consultancy. It's a question of delivering very wide service offerings and digital transformation projects which are taking enterprises and moving them completely into a digital space. And that means having capabilities in cloud, in security, in automation, in all of these areas which the companies, the service companies, wouldn't traditionally have, but they're going to need to do if they're going to be competing on the world stage.
The other theme which people in India back home are very excited about is the domestic consumption theme. But do you put companies there as prospects in your investment basket, Indian consumers?
Yes, I mean, our specialists in the area like the jewellery space, and that looks to us to be one which has got quite good demand growth. Even some of the areas which are sort of slightly lower growth are seeing slightly better prospects now in the rural areas, like some of the food companies, which have been a little bit depressed. But that seems to be picking up now. But there's huge potential, structural potential for consumption in India, and it's finding the companies which are both there and externally which are really able to benefit from that.
I come back to those external risks that we spoke about. Some global investors have begun to fret over issues like Argentina, Turkey popping up here and there. Do these have the potential to insert far more risk or volatility into the market, you think, in the foreseeable future?
Yes. I think the biggest geopolitical issue that, as I mentioned, is trade, because that's the one that can have the biggest impact on overall global GDP. There are many incidents which happen around the world which are very dramatic, or can be very tragic, but they don't necessarily have a big impact on the overall economy. And at the end of the day, when we're investing, that's what we're interested in. So it's trade and any real disruption in trade, which is the big concern at the moment, and seeing how that escalates or not between China and the US, and how other companies get hit in the meantime by that is something that we're focusing on a lot. And one area in particular focus is the technology area, because there are big, long supply chains which go across the world, which can be affected by this. So that's one area we're looking at. Within that context, however, and if that is one of the biggest risks to growth, India looks relatively well placed because it's got such a good domestic focus. And that, I think, from the global investors' point of view and emerging markets investors' point of view, means that they will go to India when they're concerned about some of those big worries globally. So in fact, India can be a relative beneficiary of some of that.
Let me ask you about the US bond deal, because that's consuming a lot of investor attention these days. Do you think most of it is played out in that run up to 3% plus, or is that something which can inject a lot of volatility yet by surprising on the upside?
Well, our expectation is that the path will be slow of interest rates up from here for the reasons that I said. And the inflation picture, as far as we can see it, is relatively muted in the US and elsewhere. However, there is more upside pressure than there's been for a while, and that's both in wages, because of the strength of the corporate sector at the moment, but it's also oil prices, and that shift in oil prices over the year has been quite strong, and that is coming through in some way into input prices. So there is a bit more upward pressure at the moment. However, it's really, when it comes down to what will shift the bond yields, is a combination of that inflation expectations, but it's also supply and demand. And so that's, as we go through the year and we see the increased supply of treasuries coming to the market, that will be a big determinant of where those interest rates or the bond yields go. And for the moment, we think that will be managed. And so if there is a big sell-off, then that program will be adjusted.
Well, early rates coming in from Europe, and they're suggesting a start in the red for the benchmark indices there. So down close to about 0.3, 0.2% on the FTSE, CAC and the DAX, as Trump has cooled, optimism surrounding the US-China deal. Also, Asia's had a fairly rough session. Hong Kong was down close to about 400 points. Nikkei slipped close to about 1.5%, 1.2%, as the yen continues to advance. So generally across the global markets, there is a bit of risk-off sentiment. PSU banks are moving quite well. So take a look at Andhra Bank, now higher by close to about 7%. Numbers were disappointing. They reported a loss of more than 2,000 crore rupees. Their gross NPAs were in excess of about 17%. But this optimism surrounding State Bank of India has lifted the mid-cap PSU basket as well. So Bank of India, Union Bank, Canara Bank, Oriental Bank of Commerce, across the board, you can see some big moves coming in on the PSU banking space. That apart, keep your eye on KPIT Technology declares numbers today. Ahead of that stock has seen a rally of close to about 5.5%, taking its 2018 rally now to close to about 45%. And Just Dial was in the red, but now it's trying to nudge itself back into the green. A lot of brokerage upgrades coming through, whether it's from HSBC or Kotak or Edelweiss. Post the numbers, analysts are getting a bit optimistic on Just Dial on the back of reasonable valuation and some sort of growth returning back. But in big earnings to watch today, you've got Tata Motors. That stock has been a rank underperformer. It's seen a fall of nearly 25% since the start of the year. One of the worst performing auto majors, in fact. Sonia joins in with the key expectations. Sonia?
Well, thanks for that. The Jaguar Land Rover business has been under pressure, and that's what the stock is reflecting. Now, even if you look at what's been happening this quarter, the volume growth for the Jaguar Land Rover business, including the joint venture, is less than 3%. Now, this compares to a 4.5% growth that they saw last quarter and 10% growth in the quarter before. So it's clearly been a slowdown that we've seen in JLR. The key markets like UK and Europe have suffered quite a bit. The management in its own press releases has confirmed that the market conditions are very weak. There's a lot of diesel tax uncertainty as well that has hit the numbers this time around, and all of that will continue. On the flip side, though, the standalone business has been picking up. This could be the second consecutive quarter of profits in the standalone business, but that hardly matters, as we know. Of course, the commercial vehicle business has been doing well across the board, so it's a cyclical move that the industry is seeing, and Tata Motors is participating in that. The key, the key number for the company to watch once again will be the JLR margins. This time around, we're expecting the JLR margins to come in at 13.8% versus 14.5% earlier. So it will be a fall. Even if you map the annual trend, gone are the days when, JLR used to do margins of 18-19% as of FY15. It's come off considerably now, and we need to know more from the management on what they're doing to arrest that market share and margin slide. Back to you.
All right, so that's the word on Tata Motors. The IMD also coming out and saying that the possibility of El Nino, they don't see that possibility this year in the monsoons. And remember, earlier they'd already come out and said that it is likely to be a normal monsoon. So that as well bodes well. But Sonia, from the ground now to the skies, what's the expectations from Jet?
Well, not flying very high, really. You know, the stock is under a lot of pressure. It's on at a 52-week low. It's lost 50% of its value this year. Now, Edelweiss expects the earnings to be good. But remember, there is some fear because Interglobe reported a shocker this time. They reported a fall in yields. So there is some fear that in competitive routes, the routes that Jet flies in, there could be some yield pressure. However, the forecast is that passenger growth has been quite good. This quarter, passenger growth was 18% versus 14% earlier. The plant load factors, PLFs, are expected to improve. The yields are expected to improve by about 2% So if there is any pressure on yields, then you could see the stock correct some more. Also, you know, the management has been facing issues in terms of debt as well. The gross debt for the company as on 31st December stood at almost 8,500 odd crores. Interest costs have been piling up. There have been management changes. So a lot of issues is what Jet Airways has been facing, and that's why the stock has been under pressure. Back to you.
All right, thank you very much for that. In news which is just coming in, the cabinet has cleared the IBC ordinance. Remember, the government wanted to make some changes to the Insolvency and Bankruptcy Code, but because the parliament was not in session, in order to give an effect to these changes, the government has, had planned to promulgate an ordinance, and that has been cleared by the cabinet. So there will be some changes in the IBC Act. A couple of them, which were, speculated that are likely to be passed, is that treating home buyers on par with financial creditors in legal rights of insolvent firms, amongst others. There you can see sources suggest that home buyers may be treated as financial creditors in terms of their legal rights. Voting threshold for the Committee of Creditors to be reduced from the current 75% from below to promote faster resolution. So now you need less than 75% approval of the Committee of Creditors in order to get the approval. So these are just some measures in order to protect the rights of home buyers, as well as perhaps make it easier for some of these deals to go through. In fact, to get us more color on what are the changes which are now being, which are a part of the IBC, Sapna Das joins in. Sapna?
Yeah, hi. So this is exactly what we have heard, what you're telling all of us. In front of, faster turnaround time for MSMEs, apparently wide exemptions have been given. And also, earlier we had been indicated that possibly a cabinet note may not be required, can be done through notifications, but now the signal is very clear. So a couple of exemptions that they have given to MSMEs, we are still waiting for the details to come out. So that will be one big sector to watch out for, because the government, always has this intent of, giving as much relief to the MSME sector as possible. Second, of course, the home buyers point that you have raised. And in fact, there was a very, very clear recommendation made by the Insolvency Law Committee on the same. So there were 10 major highlights that they had put out of which I think most of them have not been accepted by the cabinet. This is what I'm given to understand. The third, of course, the threshold, the voting threshold coming down from 75% to, I think probably they'll cap it around 60. Not very sure on the numbers, still waiting for the details on that front. But that may also be in terms of faster resolution. We have also been given to understand, as far as the related party transactions are concerned, there was a lot of talk about some kind of further, possibly some tweaking, some relief coming on that front. So we have been told that those will be done via the rules. Amendments to the rules, basically. So probably not very sure whether there will be a clear mention in the ordinance on that front. And last but not the least, the ILC had also mentioned about the fact that, before the date of the bids being submitted, if 90% of the COC agrees, then, the resolutions can happen out of court as well. We have to wait and watch for that one as well. Has that been taken up by the cabinet? Most likely it should find a mention in the ordinance.
All right, Sapna, thanks very much for that. We'll also have Lata joining us in just a bit to take us through more details of this. For now, what we know is that home buyers are likely to be treated now as financial creditors. Remember earlier, the big point was that they were being seen as unsecured creditors. So to try and help them, perhaps this move has come through. Lata is now joining in. Lata, how significant is this?
Well, the government normally doesn't tell you the contents of an ordinance till the president signs it. That's the regard you give to the whole process. That process will be obeyed. But we are trying to guess, because there was that law committee which recommended some changes, and chances are those are the 5 big points that may have been incorporated, and you already have them on air, as Sapna has probably dictated to us. One is that in the committee of creditors, when they vote, 75% had to agree to the resolution plan. That, in all probability, is going to be reduced to 66%. The more important one is the first two, that is medium and small enterprises. The defaulting guy can come and apply for the company, because it's going to be very difficult for banks to find buyers for a myriad small companies. So rather than let them go under, if the defaulter comes and buys it back, it would be good. So the MSME guys may get a exemption from the rule that defaulters cannot come back and bid for their own companies. The second one, very important, again, home buyers will be treated as financial creditors. Until now, the bankers, first, of course, 24 months of employee pay was the first, claim on the money that you get from sale of the resolution of the loan. Next were the financial creditors. Then came the operational creditors. So the home buyers did not come high up in the hierarchy. Now they're going to be treated alongside bankers. Now, you're not going to need this for many. There's one, Jaiprakash, there'll be one or two real estate companies. Otherwise, it's going to be few and far between. The use of this provision, but it's more in the sense of equity and the high-profile nature of the Jaiprakash case. So that's the third one. The fourth one, which I think almost everyone will be very keenly watching, lawyers, that is this definition of 29A. That is, who is eligible to apply for a resolution of an asset, for a distressed asset. Now, what was happening is they said if you are you have committed a criminal breach and you are, serving a penalty for over 2 years. There were various conditions which I can't remember on top of my head, but the sum and substance of that became that if you were booked for a traffic offence, you cannot apply. Like what was happening in the Tata Steel Vedanta case? Why is Renaissance taking Vedanta and Tata Steel to court and saying these guys are ineligible? Is in Zambia, some pollution control order was violated by Vedanta, and Tata Steel, some worker died in one of their plants in Europe, and therefore these guys can't apply for Electro Steel is the position that one of the bidders is taking. So that 29A, I'm quite sure, will be streamlined in some fashion so that a lot of people become eligible. Otherwise eligible, I mean, if you run a conglomerate, 2 lakh crore, 3 lakh crore conglomerate, somewhere in the world you may be running foul of some rule, flouting some traffic signal. That doesn't make you ineligible or a wanton defaulter who cannot apply for a distressed asset. Chances are those will also be incorporated in the ordinance. This is what one is expecting. We'll try and see if we can get one of the lawyers who were members of the committee, Behram Vakil, the founding partner of AZB, Shardul Shroff. These were, some of the high-profile guys who were members of that committee. MS Sahu was a member of the committee. So we'll try and see if we can touch base with any of them. But this is extremely important. Okay, we have got Rajendra Chitale joining us of Chitale Legal. Rajendra, thanks much. See, what we have is a guess that the 5 major recommendations of the legal committee have been incorporated. We only know as of now that the cabinet has cleared the IBC ordinance. But if indeed it has cleared the MSME exemption, the home buyers exemption, and bringing down the committee of creditors required voting from 75 to 66, do you think it's a major positive?
Of course it is. There's no question.
Okay.
We should look at the fine print, but clearly whatever recommendations are implemented, the recommendations clearly were an improvement over some of the issues which are currently being encountered. And clearly it will be a step in the right direction.
Okay. What would be very material in terms of that section 29A, which was holding many people ineligible? If you can enlighten us on what we should expect.
Oh, I think it all depends upon whether they are purely going by the recommendations of the committee, in which case the recommendations of the committee on 29A were primarily relating to to ARCs and PE funds, which need to basically be carved out unless they are absolute related parties to the concerned debtors.
Okay, Rajendra, we will come back to you after we also get the fine print. But thank you very much for enlightening us on these aspects. The additional point that Rajendra is making is stressed funds. You know, one of the conditions is you should not own an NPA anywhere in your group. Now, stressed funds will have NPAs. That is their job. Yeah. So these exceptions also will be carved out for financial bidders. That's an additional possibility in the IBC amendment ordinance. But I think with that, it's over to Madasan Sumi.
Yes, for now, it appears that the margins are just a tad below what the street was anticipating, 9.2% versus expectations of 9.5%. So that appears, a bit of a disappointment. The other income, too, has come in lower on a year-on-year basis. The stock has taken a nosedive. It's currently down close to about 4%. Sonia, you want to throw some more numbers at us?
Yes, in fact, you're just going through the numbers. These numbers are a tad bit below estimates, but the management themselves had guided for this kind of, an issue last quarter as well. They do have a couple of new plans for the SMP business where the startup costs have gone up. Also, there is a forex element too. The new acquisition that they have done, that too has not, has not turned around just yet. So they did talk about how the new acquisition will take some time to turn around, and that could impact their operational performance a bit. Having said that, these are not bad numbers. Of course, the top line growth is pretty good. It's a 34% jump that they've seen in their top line. There's a breakup that we're getting. The SMR EBIT 126 odd crores versus I think about 290 crores earlier. So it's not a bad performance actually. The EBIT margins overall has come in at about 0.2 odd percent versus an expectation of 9.5 odd percent. So operational performance is decent given the kind of constraints that they have. A lot of startup costs at the SMP business. The SMP margins were expected to slow down to about 6 odd percent or so. So a decent performance, I would think. Not an issue as far as the top line growth is concerned either.